morning, everyone. Thank you for being here today. I am Shaira A. Dosal, together with my groupmates, and we will be discussing the entrepreneurial risk attitude.
Entrepreneurial risk behavior.
Risk-bearing and entrepreneurship are inseparable from each other. No entrepreneurial effort is possible without the element of risk. If an entrepreneur is not willing to take risk, the enterprise continues to be in the same situation. So, risk-bearing and entrepreneurship coexist. Entrepreneurs are known to be risk-taker, people who don't fear anything in business. Even if you ask the most successful entrepreneurs now, they'll just tell you the same, that their business success was influenced by taking risk at some point. Because for them, taking risk is a way to create opportunity and progress. Risk plays a big role in the business world, especially for those looking for very profitable business opportunities. According to Asterbo et al. 2014, over half startups are no longer operating after 6 years, and 75% of entrepreneurs exit with no equity. Taking risk means performing a task of which you cannot be able to predict the outcome, whether you will fail or succeed. The chances may be 50-50. This is why the expected utility model was developed. It aims to make optimal decisions under a given probability of risk. Moving on, Knight 1921 proposed that successful entrepreneurs possess the ability to measure the probability of the future outcome of risk as opposed to uncertainty. There are several models have been developed to predict the level of risk. For example, diversification measured by the variance of performance of each alternative reduces real risk. It means that the risk of an individual asset can be measured by variance on the returns. Thus, risk on individual assets can be reduced through diversification. The second one is a model linking risk aversion to those individuals who become employees and low risk aversion to those who become entrepreneurs. Risk aversion is the tendency of people to prefer outcome with low uncertainty rather than those with high uncertainty. For example, risk-averse investor might choose to put their money into bank account with low but guaranteed interest rate rather than into stocks that may have high expected return. That is why individuals with low levels of risk aversions are more likely to become entrepreneurs than to opt for wage employment.
The next topic I will discuss is all about the method of measuring risk attitude. One way to measure risk attitude is through self-assessment. So self-assessment, according to Merriam Dictionary, it is the act or process of analyzing and evaluating oneself or one's actions. This is also a type of performance evaluation that allows you to reflect on what you are doing and what you will need to improve. These self-assessments may happen quarterly, monthly, or yearly, and the questions asked may vary depending on the level of specification. Most obvious problem of self-reported risk aversion is that it is highly prone to response bias because an individual has incomplete knowledge of oneself about their unique psychology relative when it comes to risk-taking. Skewing may happen possibly in cases of the lower risk decision but pessimistic in a high level of risk decision making. Some researchers use company-specific assumptions to measure risk attitudes, but other researchers use self-confidence or self-knowledge to look at entrepreneurs' investment portfolios and activity that may indicate their risk attitudes. Wide and varied questions ranging from general financial risk-taking and more entrepreneurship-specific settings.
Good morning, everyone. My name is Jerica Nicole T. Angrabanes, and
now let us tackle the risk attitudes of entrepreneurs versus other populations. Before starting, take note that this part of the lesson is going to be full of studies that various researchers conducted regarding risk attitudes specifically of entrepreneurs and also those under other populations. Most studies that I am about to tackle are about researchers comparing the risk attitudes of entrepreneurs to managers in the same industrial sector, the general population, and other groups. A short recap: when we say industrial sector, it means companies that mainly produce capital goods used in manufacturing, resource extraction, and construction such as mining, clothing, and etc. In connection to that, the first study is conducted by Lazier in 2005, wherein he used a large sample of over 5,000 graduates and found a variation of industry-level earnings among the first jobs selected is positively correlated with the probability of later entering entrepreneurship. Earning is a control variable given the entering breadth of skill set important for entrepreneurship. So basically, from what I've understood, this study found that there is a variation in one's earning depending on their skills. Since earning and skill set of a person has a strong connection, since the higher the skills level, the higher wages they get, and vice versa. That's it for Lazier's study. Now, using a different approach, we have another researchers, namely Hall and Woodward in 2010. They were able to find that entrepreneurs must have a relatively high risk tolerance. Evidence shows risk attitudes of entrepreneurs versus business managers are inconclusive. This study means that it is relevant for entrepreneurs to have a high risk tolerance since their decisions always involves risk that either guarantees their company's success or bankruptcy. However, data shows that the risk attitudes of both entrepreneurs and business managers is still unresolved and unsettled till today. Now look at the table. You can see two studies done by different researchers that contradicts with each other. The first one is a study done by Stewart and Roth in 2001. They find that risk prosperity of entrepreneurs is greater than that of managers. Basically, both Stewart and Roth believes that entrepreneurs are facing more risk compared to managers. However, in the second study done by Miner and Raju, they presented data from 14 other studies by means of projective techniques to measure risk preference rather than self-report measures. So, when we say projective techniques, this means that the respondents are allowed to say their real subjective feelings, example of which are interviews, which can be used in researches. So, basing from their study, they find entrepreneurs are more risk avoidant than managers. So, as we can see, Miner and Raju's study rebuts Stewart's and Roth's. They concluded that managers are facing more risk compared to entrepreneurs. Now, let's jump to another set of researches. These studies are done to know the investment metrics of individuals, firms, and other behavior researches. So, basically, these studies tells us how engaged someone is in investments. Let's first discuss the investment metrics of those in individual level, meaning a single or a particular person. V and Panos in 2014, they measured the risk preferences through stock market participation, personal leverage, and the fraction of wealth invested in the stock market. So, to be able to know the investment metrics of individuals, V and Panos studied how involved their subjects are in mostly the stock market. Lazier, on the other hand, in 2005, used standard deviation of industry-wide earnings in the individual's first job to measure how willing the person is to tolerate earning-related risk. So this was the very first research I mentioned earlier, and he used standard deviation, which measures the amount of variation or dispersion of a set of values to know the investment metrics of individuals. At this point, let's now discuss the investment metrics in the firm level. So this is no longer about a certain individual, but it is about a business organization. Kagis in 2012 used expenditure behavior to measure risk attitudes with the assumption that research for introducing new products is riskier than investing in improving existing products. So, when we say expenditure behavior, it refers to having a plan in place and followed on how expenses are decided upon, managed, and monitored. So, basing from the behavior, Kagis was able to make an assumption that firms are under more risk since they invest in a new product rather than an existing one. Xu and Rueff in 2004 further examined the myth of the risk-tolerant entrepreneur, which helped various researchers. Now, these are the studies to know the investment metrics of other behaviors. They compared the risk attitudes of entrepreneurs to the general population using PSED data to analyze the reaction of 1,261 nascent entrepreneurs and general population participants in a series of business decisions. So when we say PSED, it means Panel Studies of Entrepreneurial Dynamics. So as you can see on the table, they use two models to know the risk tolerance of the general population, namely the strategic model and the non-strategic model. In the strategic model, the researchers base it on investment choices. This captures situational risk tolerance in taking a specific strategy or executing a specific action. On the other hand, non-strategic model is based on information bias about information success, which captures predispositional risk tolerance. So, to continue, the researchers concluded that the PSED entrepreneurs are significantly more risk-averse or reluctant to take risks than the general population, proposing that risk-averse individuals enter highly risk endeavors mostly because they value identity fulfillment and their autonomy more highly than any pecuniary benefits, which is of course money. Now let's jump to other researchers measure heterogeneity within entrepreneurial groups. Various researchers, namely Stewart and Roth in 2001 and Miner and Raju in 2004, find that there are large differences between entrepreneurs whose primary goal is venture growth versus those whose focus is on producing family income. Another research is done by Block et al. Or with others in 2015 that expanded the distinctions by comparing opportunity and necessity motivations among a sample of 1,526 entrepreneurs through an email questionnaire asking participants to show their willingness to take risks regarding startups and the amount they would invest in a hypothetical investment lottery. So, this study concluded that opportunity entrepreneurs are more willing to take risks than necessity entrepreneurs, and those with motivation by creativity are more risk tolerant than other entrepreneurs. Basically, so it is saying that those entrepreneurs who are more on the creative side could accept risks better compared to other entrepreneurs. So to sum up my discussion, while literature on entrepreneurial risk attitudes is sizable and growing, no uniform consensus on how risk preferences should elicit and how they differ in populations. This needs more work to redefine populations to better understand risk aversion among entrepreneurs. So basically, what I'm trying to say is, despite all the researches I've discussed, there is still no definite answer as to the risk attitudes of entrepreneurs. Various studies is still being conducted and needs to be conducted before we could better comprehend how entrepreneurs and other populations take risks. So that's it for risk attitudes of entrepreneurs versus other populations.
Good morning, everyone. I'm Shane Kizea Ebaklayan, and for today, I'll tackle all about the entrepreneurial self-efficacy. So what is entrepreneurial self-efficacy? It is the application of self-efficacy in entrepreneurship research, referring to the extent to which entrepreneurs are confident about their own entrepreneurial skills to complete various tasks and projects. The process of entrepreneurship is full of setbacks, which requires entrepreneurs with good psychological qualities. Entrepreneurial self-efficacy is a typical characteristic of entrepreneurs. Represents the belief and attitude of entrepreneurs to overcome various difficulties and achieve entrepreneurial success. Next is, In 1994, Boydet-Vosicus proposed the idea that the self-efficacy plays a significant role in the development of the intentions and of the entrepreneurial actions. The same year, Kroger and Brazil proposed the idea that the self-efficacy makes it possible to consider the entrepreneurial potential. If we more precisely examine the works, which were thus undertaken to study the role that the self-efficacy in the study of entrepreneurship can play, the results were the following. Number one, the self-efficacy is a determining cognitive variable in the evaluation of the entrepreneurial behavior. And number two, the self-efficacy is fundamental to begin entrepreneurial activities. So here, the entrepreneurial self-efficacy is the perception of the confidence of the entrepreneurs and themselves in their own entrepreneurial capacities before they are laid out to launch out in the business. The perception of the self-efficacy is an essential antecedent of perceived opportunity. So, the individuals having a high feeling of self-efficacy regard the situations as realizable opportunities. The entrepreneurs compared to the not-entrepreneurs have a strong feeling of control of their future. The concept of entrepreneurial optimism is related to the belief in the efficacy. So, feeling of personal effectiveness and need for accomplishment. People who have weak feeling of personal efficacy in a particular field avoid the difficult task that they perceive life-threatening. They express low levels of aspiration and an implication reduced compared to the goals which they chose to reach. So, confronted with difficulties, these people stumble on their potential personal failures, the obstacles and the negative consequences of their acts rather than to concentrate on the way of getting a more satisfactory result. They tend to decrease their efforts and are discouraged quickly to face the difficulties. Next is they are slower to find their sense of the efficacy after a failure. They consider an unsatisfactory result as the mark of a deficiency of aptitude and the least failure are likely to start their own conviction in their capacities. The plurality of these characteristics minimizes the achievement appropriateness and exposes the individual to the stress and the depression. The question of the feeling of self-efficacy is thus in this form a determining factor. For an individual who wants to give again a new dash with his life, on the contrary, a high feeling of personal efficacy reinforces the needs for achievement and the personal wellness in several ways. So people with strong feeling of personal efficacy, the people with a strong assurance concerning their capacities in a particular field regard the difficulties as challenges to take up rather than like threats to be avoided. So these individuals set stimulative goals and maintain a strong commitment to reach them. They increase and maintain their efforts to face the difficulties and thus quickly recover their direction of the effectiveness after a failure or a delay. The failure is regarded as due to insufficient efforts or a lack of knowledge or know-how which can be acquired. The threatening situation are approximate here with insurance because the individual estimate to exert a control on those. These whole characteristics of self-efficacy support the personal achievement, reduce the stress and the vulnerability. They rejoin precisely the problems of impact strength. The resilient people forge their feeling of personal effectiveness through the test and develop precisely the capacity to preserve the course to achieve the fundamental goals without never slackening their attention, even if sometimes moments of discouragement can be felt. So that's all about the entrepreneurial self-efficacy.
Large literature looks at the impact of entrepreneurial risk attitude on the likelihood of starting a venture and on the eventual success. Risk attitude have an impact not only on the decision of starting a new business but also on the survival and failure rates. Gorol and Atsan conducted a study to 400 fourth-year university students, and it found that university students shows a high level of risk-taking propensity in starting their own business rather than to those non-inclined students. The realities of business venturing make it quite reasonable that an entrepreneur needs to be one who can tolerate a lot of risk, but it is also important to consider various situational factors. In business, you will encounter multiple risks. For example, the risk of utilizing your own capital. Some entrepreneurs are not that privileged to get the startup funding from investors, and therefore they are forced to fund themselves, which is a very big risk if the business fails. Individuals who are risk tolerant may be more likely to exit unemployment by starting their own business versus looking for paid work, according to Humbert et al. 2017. Risk tolerance refers to the amount of loss an individual or investor is prepared to handle while making investment decisions.
Contrary to the strong consensus among research that the risk tolerance favors business creation, it is unclear whether the risk attitudes impact the long-term success of firms. In meta-analysis of about 60 studies, Zhao and others found that the risk propensity is positively associated with early entrepreneurial intentions, but it is not related to entrepreneurial performance, defined through evidence of survival, growth, and profitability of the enterprise at the study level. Similar results are found by Kessler and others among founders for assessed venture success and business survival. David and Panos on 2014 hypothesized that the business of risk tolerance individual might underperform over the long run because of more of these individuals select into entrepreneurship. Those bring more mediocre ideas than among risk-averse individuals, who thus might only be tempted to start firms with the very best ideas. The authors gathered an impressive data set of 400,000 males who fully employed in 1993 to 1994. They identified 6,300 who subsequently became entrepreneurs defined as having majority stakes in a new firms incorporated between 2000 and 2007. Investment data shows that common stocks investors who take on individual financial risks are about 50% more likely to start a firm, but their firms have roughly 25% lower sales and 15 lower returns on assets during annual observation period between 2000 and 2010. This type of study represents an important frontier in the area of research. Anka and others surveyed and compared 340 nascent entrepreneurs and 627 new business owners, managers, and found that those who became successful self-assessed displayed a medium risk-taking propensity. It is possible that while the high risk takers are not the most successful, some risk-taking propensity is helpful towards business success. This hypothesis of the non-relation between risk tolerance and firm performance is worth of studying in a large sample. Altinin and others use an innovative approach that combines interview data from the early startup period with National Business Register data to track firm survival. Their main interest was in the firm innovativeness rather than that of the entrepreneur, but they also asked about the risk attitudes of the entrepreneur. They found that the risk-loving entrepreneurs that operate innovative firms are much less likely to have their firms survive of over a 3-year follow-up period compared to risk-loving entrepreneurs running less innovative operations. The main effect of the risk attitude is not significant in the firm's survival models. Without these business models, innovativeness interacts while the interacted model displays a positive partial correlation between entrepreneurial risk preference and firm survival. Kukulili and Ermini in 2013 found that the firms run by risk-loving entrepreneurs tend to perform better in their sample of 178 entrepreneurs running Italian manufacturing firms in 2007. The authors compared firms that introduce new product with those without new product innovations. Risk attitudes are measured with hypothetical lottery questions and are then matched with firm-level product, portfolio, and other financial data. A separate analysis of risk-averse versus risk-loving entrepreneurs reveals that the introduction of new product affects firms' growth positively and significantly, only in a sample of firms owned by risk-loving individuals. The risk-loving entrepreneurs are also somewhat more likely to introduce new product in the first place, showing that they may indeed stimulate firm growth through innovation. And others in 2010 measured in GSOEP dataset that risk attitudes have a non-relationship with entrepreneurial survival. At the exit rate of medium risk takers are 40% lower than those for lower and high risk takers. While positive relationships emerge from the literature regarding risk-taking and initial entry into self-employment, there appears to be more complex relationship between risk-taking and growth exit choice. These early results need further verification using data from other countries and different entrepreneurial populations.
Entrepreneurial self-efficacy, risk attitude, and optimism. So many researchers investigate the relationship between the entrepreneurial self-efficacy and risk propensity, or also called as the risk-taking tendency or the willingness to take risk. For example, Zhao et al. 2005 in a survey sample of 265 MBA students found the effects of risk propensity fully mediated by an individual's entrepreneurial self-efficacy. In 49 in-person interviews with entrepreneurs, the author concluded that the high ESE allows the entrepreneurs to be comfortable taking risks. Barbosa et al. 2007 took a more complex approach considering the roles of risk preference and cognitive style on 4 types of ESE and entrepreneurial intentions. Surveying 528 entrepreneurship program students in several European countries, they found that high-risk preference students hold higher levels of entrepreneurial intentions and opportunity identification efficacy, while individuals with low-risk preference had higher levels of relationship efficacy and tolerance efficacy. So these outcomes appear to support the claims that the higher risk preferences select to entrepreneurial qualities, while the lower risk preferences select to managerial qualities. In comprehensive literature review of the topic, Astebro et al. 2014 examined the relationship between the optimism, overconfidence, and entrepreneurial activity. Astebro et al. 2014 used Moore and Haley's 2008 framework of overconfidence as expression of overestimation and overplacement. So, overestimation refers to estimating one's abilities to be greater than they really are, while overplacement refers to estimating one's abilities to be greater than they really are relative to another group. Astebro et al. 2014 pointed out that it is often difficult to distinguish the effects of optimism, overestimation, and overplacement. The effects psychologically operate on different levels of specificity. Thus, optimism applies to all situations, while overestimation applies to a set of situations that reference a specific skill, and overplacement applies to a specific situations that involves a specific reference group, such as certain market. Researchers measure the correlation between general optimism and entrepreneurial activity using different predictive responses to future outcomes. In contrast, Bengtson and Ekblom 2014 examined monthly survey data of 153 entrepreneurs and non-entrepreneurs regarding their beliefs about future nationwide economic conditions that spans 13 years. Comparing forecasts to economic reality, they noted that the entrepreneurs have higher optimism about the economy but less forecasting error. However, the forecasting error component of this study may be inclusive given the economic growth between 1996 and 2009 generally exceeded expectations of the general public. Those who overestimate their lifespan are more likely to be entrepreneurs, and the most optimistic are more likely to make high-risk financial decisions. Landier and Tesmar 2009 compared French entrepreneurs' own expectations of future income with linked panel data and found that overconfident entrepreneurs are more likely to use short-term debt financing. Khmer and Lovelo 1999 presented a scenario to university students in which pay depends on rank. So when they ask whether they would like to receive their rank randomly or based on performance on a trivia quiz, those with high estimations of their abilities are more likely to select the trivia quiz. Interestingly, Home et al. 2013 used a similar approach and found that Chinese entrepreneurs are more likely to enter skill-based competition, even if they do not overplace themselves, suggesting that entrepreneurs may be drawn to competition regardless of overconfidence. In conclusion, research provides clear hypotheses why entrepreneurs are optimistic and overconfident, and why these traits may be deleterious for entrepreneurial performance. Overall, whole plenty of rooms remains for further inquiry and sharpening of results. This part of literature is more developed and cohesive than many other areas of entrepreneurial characteristics research.
Good morning, everyone. I will be discussing about general summary of the research findings. Entrepreneurs are more open to experience, conscientious, and extroverted than the average populations, while other studies revealed that entrepreneurs are less conscientious, agreeable, and extroverted. In the research finding, results show mixed results. Entrepreneurs are more likely in the 50-50 situation because the researchers said that entrepreneurs are more open to experience, conscientious, and extroverted, and also entrepreneurs are less conscientious, agreeable, and extroverted. That's why it was a mixed result, because when you are making a business, it's hard to negotiating to someone if you see their company will be going into bankruptcy. Second, entrepreneurs have higher self-efficacy in innovation and risk-taking, while innovativeness correlates with the Big Five personality traits. Number 1. Openness. It is a personality that you are a person that open in anything, like you are curious in that thing and you want to know what is that all about. Number 2. Conscientiousness. It is a personality that you want to achieve something, like you will do anything just to get that thing, and a loyal person, and have a lot of goals in the business. Number 3. Extraversion. It is personality that will seek happiness in the business. That person is more like in the social and energetic person. Number 4. Agreeableness is a personality that have a trusted in the workplace and a straightforward person. Number 5. Neuroticism is a person that had a lot of tense in the workplace, like a shy person. These are the 5 big personality traits. Third, higher risk tolerance is likely to succeed and operate in innovation, films, and perform better. Higher risk person will most like to succeed in the business because If you will become that person, your business will become successful in the business world. Because you will know everything if there's something happen in your company. You will directly make a solution in that problem in order that it will not become a big problem. That's why it had a big help in the business. And lastly, opportunistic individuals are more likely to make risky entrepreneurial decisions. Yes, in the business world, it's so risky to make a decision if you accustomed in being a opportunistic person, because in the business money will particularly involved in any kind of situation. Being a opportunistic person will become an 50-50 situation, because if you commit in that opportunity, the outcomes of that for sure will be success or fail. That's why it's so risky.
To sum it up, risk behavior is something that an entrepreneur must possess, because you can't be successful in business without taking risks. Even if it fails, failed risks aren't always negative. Sometimes they provide the most valuable lesson that an entrepreneur can learn. Just like what Dennis Waitley said, life is inherently risky. There is only one big risk you should avoid at all costs, and that is the risk of doing nothing. So that's all, everyone. Thank you for listening, and we hope that you've learned something from our report.